let's look at the NASDAQ. First off, read this disclaimer carefully. Okay, here you can see the zeitgeist's huge move. But at this point, even though I am happy with these huge moves, I'm starting to think that maybe we are due for a pullback because we haven't had that seasonal weakness yet, which we usually do have in the summer times. And it's historically a very healthy dynamic of the market. So in this video, we will look at the NASDAQ, which recently made new all-time highs. It's had an absolutely historic move. So we will look at the NASDAQ ETF, the QQQ. We will look at the TQQQ, which is a way to get three times bullish leverage exposure, and the SQQQ, which gives you 3 times bearish negative exposure to the NASDAQ. Let's first look at the seasonality. So the general rhythm of the market is that you have strength in the spring period, and then it gets weaker into the summer times, where you usually have a bit of a pullback, a correction. The healthy thing about having a correction is that it helps create a very, reasonable and rational market, because, excesses are never healthy. And after that pullback period, we usually have some strength heading into the winter times. So that's the usual seasonality. This year we had a very strong June. So we have already had strength. So we are very due that pullback, which we usually have in this period. Okay, so let's first look a bit here at the market. Okay, let's go to weekly data points first. So this is the long-term picture here for the NASDAQ, and you can then see that in this bigger picture, you have to go all the way back to the dot-com bubble to have something similar to the phase we currently have. But even the dot-com bubble took more time than this. I mean, this is just such a ridiculous move. I mean, it is pretty darn extreme. Look at how sharp this rally was. And the issue with these kinds of rallies, when they are this strong, is that they distort the psychology of the traders. Because something you are probably aware of yourself is that if you have a new position in your account and you see a red number, meaning there's a loss, you are much more quicker to sell to keep the loss from getting big. But let's say that you have a 40% gain on a stock. You have probably observed that you're willing to take a much bigger loss on a gain than you are on a losing position. But from an objective standpoint, losing 20% of a 40% gain is just as bad as losing 20% on just a losing position from the get-go. But this illustrates how you can get those huge rallies, but also these major crashes, because the people's psychology is distorted. They are willing to take a much bigger loss because it takes quite some time for them to see that red number in their account, and also to just notice that the green color they're seeing, it actually has lost a lot of its prior value. So my point here is that this is simply not healthy. This is a healthy market. This right here is just very excessive. Hence, even though from a purely objective standpoint, obviously the bulls are in control, there's nothing more bullish than a new all-time high. But if you look at the history here, this is just without much precedence. So if you look at some of the previous rallies, like if you take this rally here, it took 126 days, 32% gain. If you look at this rally right here, this was 30%, 175 days. If you take this rally here, so you have 53-ish% gain in just 112 days. That is a lot. That's a whole lot. And so we are very, very due for a pullback. We just are. So you gotta ask yourself the question, from a shorter term standpoint, looking at the coming weeks, you know, if you were to be bearish on the NASDAQ, have some short position, how much of a rally to the upside could hurt you, you know, at this point, at these elevated levels? I mean, and because there's many companies here, you know, Amazon and Tesla, they've had these extreme moves. They're really almost begging to be shorted. I mean, they just really are. I mean, this is just very excessive. Mean reversion is a common thing in this summer period as well. We haven't had that yet, so we are very much due. You can mark the case that there's a bearish divergence between price and the RSI. Looking at the accumulation distribution line, you can also see a bearish divergence between the recent move and what's going on here, meaning this recent move here has not been on massive volume, buying volume that is, hence it could be a bit of a blow off top. Yeah, there's an 87% positive correlation between the NASDAQ and the S&P 500, so they do move together. Let's now look at the correlation with these leveraged products. So let's look at have the QQQ here in the background, like down here, and then we look at the TQQQ, like that. So here we have the TQQQ. You can see here that there is a 93% positive correlation between the NASDAQ and the TQQQ. So the TQQQ, it is the bullish leveraged ETF. Given that it's only quote-unquote 93% positive, there is, you know, the remaining percentages there, you know, from 100% means that there is some divergence here. If you go to the daily data points, there's an 81% positive correlation. Hence they do diverge, but generally speaking, the TQQQ, it is you know, a decent way to get leveraged bullish exposure to the NASDAQ. If you measure from this low to the recent high, 240%, that's pretty decent. That's a big move. So the leverage effect has certainly worked throughout this rally. But you can see here that the TQQQ has not made a new all-time high, which is reflective of that divergence. Let's now look at the SQQQ. This is the one for if you want to be bearish on the NASDAQ. Of course, a better way to be bearish on the NASDAQ would be to short the QQQ or to use option strategies on the QQQ, because the QQQ is very liquid. But the TQQQ and SQQQ are some leveraged products with decent liquidity. But we can see the divergences. Okay, so SQQQ, there's a minus 91% negative correlation on the weekly data points. So in this case, they do track reasonably well, but not like perfectly. On the daily data point, it actually gets worse, minus 78%. So the correlation is strongly negative. It is negative enough for it to be a way to be bearish on the NASDAQ, but with minus 78%, it means that the remaining percent are divergences from the underlying index. So this is one of the ways in which you can illustrate the risks with these leveraged products, which does take the form of these divergences from the underlying index. But as we saw with the gain from the low of the TQQQ, it has worked, you know, it simply has from the lows. I mean, that's a pretty decent gain, but it is just something to be aware of. But yeah, let's actually look at some, before I make my conclusion on the NASDAQ, let's look at some other data. So here's the QQQ, extremely liquid. The average daily dollar volume here is almost $9 billion US, so extremely liquid, super tight spread. The issue is that, you know, the reason why I'm thinking a bit more bearish now is because the price earnings ratio is 27. If you look at the total world stock market ETF, the PE here is 19. The price book ratio for the NASDAQ is 6. While the book ratio here for The total world stock market is 2. Okay. Value investors prefer price book to be below 1. So the NASDAQ is really richly valued. The yield is 0.65%. So you are basically not, from a dividend perspective, you're not incentivized to like hold on. So yeah. So to sum up my take, okay. Quite clearly, the bulls are in charge of the NASDAQ. Okay, so the bulls are in charge. So as far as don't fight the trend, we need to respect the bulls. Just do. Okay. However, the contrarian in me cannot help to think that of all the times to put on a short position, a bearish position on the NASDAQ, this is probably one of the best. From like the contrarian standpoint, in the sense that we have had this excessive move of the lows, of the recent lows. We are in a season where there historically is weakness. Throughout this entire period, we see this strength, spring, strength, late part of the year. In this middle period is where we characteristically do have at least a month of some clear weakness. In this period, the June was the weak month. Here as well, the June was the weak month. We did have a very strong June this year. We are very due that pullback. It is healthy. It is very normal. It's part of the market rhythm to maybe pull back to like the 50-day moving average. Yeah. So let's actually look at some of the components of the NASDAQs to sort of look at where they are trading. So let's look at the biggest ones. So let's Apple, Microsoft, Amazon, Facebook. Okay, so let's do it in that order. We look at Apple. Here also new all-time high. Let's look at it a bit more historically. I mean, look at how excessive this move is, how sharp it is. Look at what's happened previously. Usually there are pullbacks. That is simply how the market works. This is very bubblish. This is euphoric. Let's look at Microsoft. Here again we see something quite similar. A very excessive move, huge move, overbought condition, bearish divergence here on the RSI. If you look at the long history here of Microsoft, there usually are pullbacks. It is how it works. Let's look at Amazon. Here as well, a key component. I mean, look at this. This is ridiculous. I mean, this stock is basically begging you to short it. I mean, look at this move. I mean, obviously, it's been very difficult to short it. The bulls are in control. Let's be perfectly clear, letting the trend be your friend. I'm talking about bearish position here from a contrarian standpoint. The evidence is in favor of the bulls. But look at this move. It's ridiculous. So how much more of a rally do you actually risk by being bearish on the NASDAQ at this point, or Amazon specifically? Seriously, it's ridiculous. It's ridiculous. Facebook is not that crazy, but it is sort of cooling down a bit. Tesla is just crazy. Okay, so I mean, look at this move. Look at how wild this move is. Like, to be perfectly clear, I am bullish on Tesla long term. I'm very bullish on Tesla. I think Elon Musk is a transportation prodigy. Okay, he's brilliant. Transportation is his gift. But come on. I mean, this one is practically begging you, daring you to put on a short position. I mean, what do you actually risk by being bearish on Tesla short term at this point? Seriously. Yeah, just crazy stuff. Let's look at some of the seasonality here of these stocks we looked at. Let's look at Apple. See how it usually acts in this current period. You can see that June is historically a weak month. That was definitively not the case this year, meaning we are due a pullback here on the NASDAQ. I mean on Apple. Let's look at Microsoft. Go. Looking at the seasonality long term, strength early, strength late. You can see that in this period there usually is weakness. We haven't had that, so historically we're due one when it comes to the NASDAQ. I mean to the Microsoft as well. Okay, let's look at Amazon. Let's look at this. So you can see that this current period, summer, early autumn, is historically one of the weaker periods. We are due very much do a pullback. It would be completely natural. It's practically begging you to be short at this point. Okay, blah blah blah. When it comes to Facebook, it is a bit different. Certainly, yes, but you can see here that autumn and the autumn-winter is actually one of the weaker periods. So that's a bit different. Let's look at Tesla. Go. Okay, like this. Okay, so June is actually one of the stronger months. And that's definitively the case, no doubt about that one. June is strong, but July is actually one of the weakest months. I mean, it is literally the weakest month. So from a seasonality perspective, Tesla is begging you to short it. I mean, bear in mind, not that far back, Elon Musk said that the current stock, that the stock price for Tesla was excessive. Here I actually found it, like here. So Elon Musk said Tesla's stock price is too high, and this was on May 4th, okay? So Elon Musk made headlines Friday after he tweeted that Tesla's share price was too high, as strange for a chief executive to do, planning his own stock. His tweet hit Tesla, which fell $60. So on Friday, what was that? Okay, so around May 4th. So let's look at May 4th here. So let's go back. So here is May 4th. So when Tesla was at around these levels, here, Elon Musk said that the stock price was too high. This is where we are now, okay? Okay, yeah. I think you get my take. Okay, so just to sum up here. To be perfectly clear, bulls are in charge of the NASDAQ, okay? Letting the trend be your friend, it makes sense to be bullish. However, quite clearly, looking historically, you could make a super strong case, I think, that a lot of the upside has already been made, at least for the temporary period, meaning this is the time to start to think like a contrarian, in the same way that when you see a major pullback, you think about buying the dip, meaning here you would be more contrarian. Same thing here. Here, the big brain investor take, galaxy brain, is to think maybe be bearish, okay? So buy low, sell high. But yeah, whatever you do, of course, don't fight the trend. May the trend be with you, of course. But I think you sort of get my point in this specific instances.